Welcome to Trading Lounge and the US indices. We'll be looking at the S&P and probably let's look at Amazon and Google. Yeah, interesting here in that on the weekly chart we're looking for intermediate wave 3 here in blue, and it does appear that we've got that top in place and we're just tracking that now. We'll look at that on an intraday basis in a moment. If that's the case, then we'll be looking at wave 4 pulling back 38.2% of wave 3. So in here we can bring this retracement tool here and the 38.2% retracement level here, which is also very close to the wave 4 of 1 lesser degree here as well. So that's what we're looking for here in the bigger picture. And how long this will take, I don't know. Wave 2 was quite simple, so we can expect wave 4 to be more complex. It will be moving across this number here that will be significant, the 2,500, which we call a medium level, which is halfway between two major trading levels, and the major trading levels are 2,000 and 3,000 here. The move down from here is not a massive bear market, it's just a corrective pattern, but it could get rather complex in terms of, I've got it as a simple ABC, but it could get more complex in terms of a triangle, a double zigzag, and so on. We'll just see how that pans out. So on the daily chart, probably no need to go there really, but just basically we're expecting a top, and it's starting to confirming in the way that this little move down through here has presented 5 waves now as well, and this is pretty much the same with Google and Alphabet and Amazon. So yeah, time to change equity trades, which we've also been doing as well. Putting in a few shorts, tightening the stops up, taking profits on our long trades. It takes a little while to make the turn, because you like to do it in increments and try and find a nice balance point on it all. If you sometimes when you go for the most perfect turn and you're trying to turn 10 or 20 trades around, then it can get you can make mistakes. So it's good to take a balanced point of view on things, and it's less stressful that way as well. So I'll just cut through to the hourly chart here now and start looking at this top here. So okay, I haven't updated this for a little while, but let's just do this now. So pretty much on track all the same though, so we could use let's just use these guys here while we're here. Don't want that copy tool. So, don't need these little guys. Borrow this, copy this as an A wave here, B wave here, and a C wave. It looks like it's done already, but we'll see. The situation here also too would be looking from this high to this low here, pulling in the 50-60% sort of standard sort of zone here. So that's that, and we can move that. So we'll look at that more closely on the tick chart. But bottom line here is that taking out wave B here, or shorting on wave B here, would be the safe trade. And it's safe because what it does, if this moves down from here, then taking out this low here, that means that it would leave this move here in 3 waves as an A and a B and a C being corrective. And what we could expect is At minimum, if I can just move this here, this would be at absolute minimum here. This would be, it would take us down to the 26 here. Okay, that would be at the minimum move. We'll get a bounce there, but we should go down further, a lot further than that. I've just been explaining with the weekly and the daily chart and hourly chart and so on. Yeah, so that would be the safe trade. Of course, you could short right now, and you could put the stop right on top there if you wanted to as well. I'll just save that. I suppose, you know, taking another point of view, a nice sort of safe way. Let's just go to the tick chart and drill in here a little bit. Well, that does leave me 5 waves up here in terms of 1 and 2 and 3 and 4 and 5. This is 100 ticks, so we could put that there. But the problem with this here so far is I like to get double confirmation as such, so we know that we can go short on this one here. The problem with putting this little 5 waves here is that I would like to see, I can't draw on this side of the tick chart unfortunately, but what I would like to see from this high here is I would like to see 1, 2, 3, 4 and 5 coming down to here and then a bounce here. So I'm drawing this picture here to go over here. So at the moment here we've got 1 and 2 and 3 here, but we would need to see 4 and then down for 5 here, because currently I've only got 3 waves down here. So this move down here can be corrective. So what could occur at this point here is that the market, we could look at this as wave 1 here, wave 2 here, wave 3 coming in here, wave 4 and wave 5 here, and then moving down here. So we're looking for 5 waves in wave C, but this may just be, you can just borrow this for a second. This could just be wave 1 here and wave 2 here, and then we go 3, 4 and 5 here to make wave C here. It's a bit complicated, I know, but so it could go like that. So we do need to see a little bit more evidence so far. And the other point here, of course, from this low to this high here as a wave 2 pullback, we would also be looking in the 50 to 60% mark, which is in here. So it's all sort of fine for moving higher here as well. So really this can be you know, a long trade coming into play here as wave 1 and wave 2 pulling back here. So we just need to be a little bit mindful of that. So anyway, just check that out. Just, you know, basically if you see the market move down to 26.30, then you'll see a bounce off that. That's the top of group 1. So there will be a bounce off of that, and then that will move back 61.8% as well. So then that would be the optimum short at that point. So down to here, and then we can look at 61.8. So there, that little box here, that would be the best trade, because it will come down in 5, bounce back for here, and then move down. So shorting at 26.35 would be our level here. So I could just, I'll just leave that, but it's enough there. I'll just save that. So that's the story. And if we look at some of the francs, where are we? Alphabet here. So with Alphabet here, we're calling this in as a top, but looking at this as 5 waves down, and it said this can be an A and a B and a C wave here for its 61.8%. Same rule applies though. This would be the bottom of the B wave, so we would need that to be taken out to short. If the market ends up under the 1,000 here as a retested resistance, looking for a reference point first. So like this here, the market basically comes down. Don't chase it, allow it to go back, and then that here becomes, oops, wrong line. This one comes under here. If that, once you've got your reference point there, if that's breached from that point, well then you've got your short trade from there. And the other thing that sort of bothers me about this here a little bit is that I never got a really nice 5-wave structure here in this 5th wave here. So that's why I've got this wave 4 here. It's possible that this is a wave 4 here, and we've got this wave 5 to go up here. This is sort of it's possible, and I'm looking at this on the Nasdaq as well. It's the same thing, so I'm just going to save that. Normally we need to be, when we're trading in a particular direction, we need to be on the right side at the right time, and what that means is that you would gravitate towards the closest largest number, in this case 1000, and you would want the market to be, if you're going to short this market, you would want that as the retested resistance. Also too, if you were going to go long in this area here, the closest largest number is the midpoint here. So from 1000 to 1100, 1100 is the minor level, major level, then there's the medium level, and then there's the minor level, and then these are sub-levels in here with the Fibonacci numbers as price ratios 1, 2, and 3. 5 is the midpoint, 5 is the second strongest number, then group 2 here, and so on. So if I was going to go along here, I would want tested support on top of the 50 here in that case, which would be which would be above the 61.8%, and will also be on the second strongest number, the number 5 there. So 1 is the strongest number, then 5, then 8, then 3. So this is where it can fail from here in your sort of little head and shoulder sort of traditional sort of sense, but we need to see this move down. So basically the short trade here, if the market locks under the pivot within group 1 is 1, 2, and 3, so the 2 here, if the market finds this is a retested resistance, then you can get your first position in there, but then look to build here. The other trade here would be seeing the number 8 here as a retested resistance as well to add to that, but this is the optimum to short it at this point here, and this will be much the same for Amazon as well. So into the Amazon space here. So the move down through here, it does count as 5 waves, but you know, I've got it as 1 and 2 and 3 and 4 and then 1, 2, 3, 4, 5 here. But realistically, this could also be here. It can be an A wave here. I mean, I like to look at both sides. I don't like to make it confusing, but this is why the entry and the setup is got to be, you know, sound. And in this case here, I mean, if this was an A and a B and a C wave here, then we'd make a new high above here. Okay, what we'd be looking for here is that this is the 50-60% retracement level. This is where we expect it to. We can see that it's sort of really lagging to go up here, but once again the safe trade here would be taking wave B out here. So a move down from that point, taking this low out here, because if this was wave 1 and 2 here, then this would be wave 3 here, or it could be wave 1 and 2, and then 1 and 2. But in any case, whichever way it is in terms of a bullish market, that low there being breached would just destroy any impulse wave to the upside and leave this as a confirmed corrective wave, taking this out here. So then we can look to go shorter down here. So really the short trade is at wave B here, but of course the optimum trade is up here. You need to have a little bit more of a skill set to get the to lower the risk on the entry, so to speak. I think I'll just leave it at that actually. It's all pretty sort of simple. Alrighty, cheers.